Hello and welcome back to the channel. If you're thinking about buying a home or refinancing, today's market moves are worth paying close attention to. Mortgage bonds started the day weaker, and the 10-year Treasury yield is up about 5 basis points, sitting right around 4.50%. That pressure is pushing mortgage rates higher for consumers. The big catalyst yesterday was comments from Cleveland Fed President Beth Hammack. She raised some eyebrows by suggesting that both higher oil prices and lower oil prices could fuel inflation. She also believes AI will be inflationary, even though many other Fed officials think it will actually help bring prices down through higher productivity. The bond market didn't like it. Mortgage bonds sold off and are continuing that move today. On the jobs front, the ADP private payroll report showed 98,000 jobs added in June. That was a little below expectations, but still shows the labor market remains relatively solid. Wage growth stayed steady. People staying in the same job saw 4.4% raises year over year, while job switchers got 6.6% bumps. Now for the housing-specific numbers. The Mortgage Bankers Association released their weekly application data. Mortgage rates held steady last week around 6.6%, which is about 22 basis points lower than the same week last year. Purchase applications were basically flat week over week, but are up 3% from a year ago. Refinance applications also showed little change week to week, but are running 9% higher than last year. So there's still some modest activity, but nothing explosive. Looking ahead technically, mortgage bonds have broken below their key moving averages and have more room to fall before hitting major support. That suggests mortgage rates could face additional upward pressure in the near term. The 10-year Treasury, on the other hand, has room to move higher as well. Bottom line for consumers, the housing market remains sensitive to any signs of sticky inflation or a hawkish Fed tilt. Rates around 6.6% are better than the peaks we saw in recent years, but they're still high enough to keep many buyers on the sidelines. If you're in the market, keep a close eye on the bond market and upcoming inflation and Fed data. Small moves in yields can make a big difference in your monthly payment. Let me know in the comments, are you planning to buy or refinance this year? Drop your biggest question about today's numbers, and I'll try to answer as many as I can. Thanks for watching. Hit like and subscribe for more straightforward housing and mortgage updates. I'll see you in the next one.